also have a look at hog markets this week from University of Missouri Extension economist Ron Plain. According to the USDA's latest count, there were 66.1 million head of hogs and pigs in the U.S. on December 1st. That's up 2% from a year ago. The agency's quarterly inventories could provide a glimpse into losses from the porcine epidemic diarrhea virus, a problem that could become harder to control. Reuters reported Monday researchers have identified a third strain of PEDV, the latest in Minnesota. November's slaughter numbers showed pork production at nearly 1.9 billion pounds, down 7% from the previous year, with the total number of hogs slaughtered down 9%. We talked with Ron Tuesday and began by asking for his thoughts on the current inventory of hogs and pigs in this country.
USDA's December survey said we got more hogs than a year ago. Breeding herd up 4% compared to a year ago. Market hog inventory up 2%. That was in line with what we were expecting. 2014 was a very profitable year for hog farmers, and like other farmers, can't stand prosperity, so they're planning on raising more hogs.
That total inventory, is that an indication that farmers are intending to increase the herd?
Yeah, the fact that the breeding herd is up 4% and market hogs numbers up 2% indicates expansion's coming. USDA is saying about 4% more sows will farrow this winter than a year ago, 3% or so more in the spring. So yes, it's a response to profits and desire to produce more hogs.
The average pig saved per litter from September to November was 10.23. That's the record. That blows my mind, Ron. Should it?
Well, the long-term trend is about 2% more pigs per litter per year. That's the trend. For the last several quarters we've been down sharply, as much as 5.5% compared to a year ago, because of all the death loss from the PED virus. But death loss this summer was less. PED looks like more of a winter problem for baby pigs than a summer problem. So yes, it's a bit surprising, but not totally astounding.
November pork production down 7% total pounds, 9% in total head. Why was that?
Well, PED. Pigs go to slaughter at 6 months of age, so if you back off from that back into late winter, spring, when those pigs were being farrowed, very high death loss due to PED, and so 6 months later they're not available to slaughter.
What do you expect supplies to be like in 2015?
Well, if USDA's survey numbers are close to right, we should have somewhere between 4 and 5% more hogs to slaughter this year than last year. Weights have been very heavy. We were up 8.5 pounds on the average live weight of hogs slaughtered in 2014 compared to the year ago. We're hoping to see that moderate some, but we could well be up 5 to 5.5% in pork production here in 2015 compared to last year.
Let's talk about marketing. December was not kind. What led to that huge slide?
Well, again, PED is a big part of it. It really looks like we're losing lots of pigs. We know we did last winter, not nearly so many during the summer to PED. And those pigs that didn't die last summer showed up in packing plants here this winter. And it looks like that may be the case going forward. It looks like PED death loss is picking up as we've moved into winter again and could well moderate next summer. So we could see big seasonal swings in both slaughter and prices ahead of us.
2014 exports and into 2015, what does that look like, Ron?
Well, as you might expect with record high hog prices and pork cutout value, exports are kind of softening. The dollar has really strengthened in recent weeks. That's also bad news for exports. So our expectation is the amount of pork we're going to export in 2015 may be up a bit because we're going to produce more, but no big increase, and don't be surprised if it might soften a little bit here in the year ahead.
We talked about prices. Where are current break-evens at, Ron?
Well, on a live weight basis, somewhere in the low 50s, 52, 53 cents a pound. On a carcass weight basis, that works out into the high 60s, close to 70 cents per pound of carcass.
Does that leave enough meat on the bone for a profitable 2015?
Oh, it looks like it will. If you plug in the futures prices for corn, soybean meals, and hogs, it looks like, yes, we're going to make some money in the year ahead, but not near as much as hog producers made in 2014.